Hey everyone, welcome back to Corporate Decoder. Today we are diving into OSI Systems' latest quarterly report, but be warned, there might be more here than meets the eye. Are they soaring to new heights, or are there hidden challenges lurking beneath the surface? This report gives us a snapshot of how OSI Systems is doing financially. So buckle up and let's decode what's really going on. And before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join. This report covers the period ending March 31, 2025. It includes a look at their balance sheets, income statements, cash flows, and all the important notes that help explain the numbers. First up, the balance sheets, which show what the company owns assets and what it owes liabilities at a specific point in time. Let's focus on a few key items. Accounts receivable, or the money owed to OSI Systems by its customers, increased from about $648 million to $672 million. That is a healthy sign, indicating increased sales activity. Inventories also went up from roughly $398 million to $439 million. This could mean they're expecting more sales, or it could be a sign of potential challenges in moving their products. It could go either way, we'll have to see. Looking at liabilities, their bank lines of credit decreased significantly from $384 million to $156 million. This suggests they've been paying down their debt, which is generally a good sign. Now, let's turn to the income statements, which reveal how much money the company made and spent over the last 3 and 9 months. This is really what we all came here to see. Total net revenues increased year over year, going from $405 million to $444 million for the quarter, and $1.10 billion for the quarter, and $1.05 billion for the 9-month period. That's solid growth. Unfortunately, the cost of goods sold also increased, rising to $294 million for the quarter and $789 million for the 9-month period. Basic earnings per share, or EPS, increased from $2.10 to $2.2045 for the quarter, and from $4.92 to $5.78 for the 9 months. This indicates improved profitability on a per share basis. Comprehensive income gives us a broader picture, including things like foreign currency adjustments and unrealized gains or losses on derivatives. For the 9 months ended, it went from $83.3 million to $88.9 million. The statement of cash flows is essential to understand where the company's cash is coming from and going to. Net income, a key component of operating activities, went from $83, $50, and $56.9 million. Net cash from operating activities swung from negative $58 million to positive $97 million, a big jump. They spent more on property and equipment, $17 million versus $13 million. This can indicate future growth plans. They did a bit less rolling with proceeds from maturing of certificates of deposits going from $10.3 million, meaning they invested less and focused more on the operations. They were aggressively paying debt to payments going from 6/6 to 6/1. Let's take a quick look at the statement of stockholders' equity. The weighted average shares outstanding used to calculate per share numbers also shrank slightly from about 17 million shares to 16.7 million shares. This is the result of share repurchases. Now let's pivot to the more complex parts and focus on what they mean. Number 10, commitments and contingencies, is all about potential risks and obligations they have on their plate. These are things that could cost them money or impact their business, but the final outcome is still uncertain. They dive into a business acquisition from September 2024 for a critical military space and surveillance solutions provider. They paid $76 million upfront and potentially could pay another $24 million dollar for it, and potentially could pay another $24 million. The filing confirms the existence of authorized preferred stock, but with none issued or outstanding. This dry legal note just shows they have the option of raising capital that way, but it's not something that is happening. Stock-based compensation is basically when a company gives stocks to their employees. This is not a cash expense, but it's still an important factor that the company values those employees, and the employees get to enjoy the performance of the company. Now, let's decode what management sees as important. This section gives us insights into their perspective and priorities. They highlighted exposure to global macroeconomic factors, supply chain disruptions, inflation, and even the Russia-Ukraine conflict. So they're keeping a very close eye on the big picture. Currency exchange rates get a mention, with a positive impact in the recent quarter due to the weakening US dollar. This section is about how the company makes sure its financial information is accurate and reliable. They've evaluated their controls and procedures and believe they are effective. Finally, the exhibits section is just a list of all the supporting documents filed along with the report. These are mostly relevant to legal and compliance experts. Now, stepping back and looking at the big picture, there are some signs that OSI Systems is in a solid position. The increase in accounts receivable, sales and EPS is promising, but they need to look at increased costs as well. One notable point is how they're using debt, a lower credit line usage paired with the bond offering for acquisitions and share buybacks. It is important they remain profitable, however, as an increased debt might also be a liability in a slower market. What do you think? Is OSI Systems setting itself up for a bright future, or are there hidden dangers we should be watching out for? What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.